Coming up in this video, we'll talk about Meta, which is jumping almost 13% at one point this morning, which is absolutely insane off of killer earnings numbers. Microsoft too, giving back a little bit of its gains, but still up 6+% on a stock that doesn't usually move that much on earnings. Let's talk about that. And a personal favorite of mine, which had incredible earnings, Robinhood down 4.5% at the time of recording this video. Of course, things are very jumpy, so by the time you see this video, stocks might have moved a little bit, but let's get into the weeds a little bit with what happened with these earnings reports and whether or not these stocks are a buy, a sell, or a hold, in my view. Let's jump in. Welcome back to the channel, guys. I hope you're doing well, and I hope that my videos have been helpful to you. If you're new to the channel, make sure to subscribe. Let's talk a little bit about these earnings reports, but before we do that, taking a quick look at the SPY, the S&P 500 here on a daily chart, gapping up in terms of what we're seeing from the earnings reports, right? So Meta, Microsoft, these giants reporting very strong earnings has the whole stock market a little bit excited. Although the stock market has been excited, we've talked about this many times, the overall market continues to grind higher. And the question is this a little bit of a buy the rumor, sell the news event where perhaps we see a little bit of profits taken on these giant jump ups in multiple stocks that we're seeing this morning? And an honorable mention in terms of the huge jumps that we see in Meta and Microsoft is, of course, one of their primary contributors, which is Nvidia, right? Nvidia sells chips, not to mention also AMD jumping big time here today off of these very strong reported earnings. Why would that make sense? Well, if the big customers of Nvidia, like Microsoft and Meta, report really strong earnings and they're sitting on a giant pile of cash, where's that cash going to go? Well, it's going to get funneled into investments in more chips and more AI, which Nvidia is the primary seller of. The stock jumped, like I said, here at the time of recording, over 1%, trading in the 180s for the first time ever. That is an all-time high for Nvidia. But let's stay focused on this. Meta is one of my bigger positions. I've mentioned in the past that I would have liked to get a bigger trade size on Meta, but I'm going to take what I can get here. Look at this giant gap up in the stock. And the question is whether or not this will be a gap and go type of situation in which Meta continues to drive higher for the next days and weeks, or if we're going to sort of fizzle out and retest these areas as they often do following big earnings excitement, right? You get the big pop and then people sort of sell into that, take profits, etc. We'll see what happens there. But the question is Meta a buy? Well, here's a look at Meta, which is not yet updated in terms of our price chart. It's going to jump up to here when it does, because it went up to 750 plus at one point yesterday. But let's talk a little bit about the stock and whether it is too expensive or if it's priced fairly. Now, this data has yet to update, but their earnings were massive beats. And so the trailing 12-month PE around 25, which was already below its 3-year average, and a forward PE of 24 or so below the 25 3-year average, still looks relatively attractive to me. Earnings growth is massive also for Meta and looks really strong. Of course, these numbers will have to update once we get the earnings data pulled into the stock box, which is the software I'm looking at, but that should be available if you have the stock box by this afternoon or tomorrow. In terms of the actual earnings, let's talk about it. Earnings surprised by 21%. 7.14 per share compared to the $5.88 expected. Revenues smashed expectations by $2.7 billion. That is a huge beat in terms of revenues for this company. They reported $47.52 billion in revenue for the quarter, which is absolutely insane. And just look at the stock on a weekly chart going back to the sell-off that we saw in 22, right? So we saw this giant move lower, a 75% drawdown, which was huge. But look at the bounce back that we've had since then. And this is the risk to reward with some of the great companies in the stock market. You're talking about a 700%, a 7x on your money if you had bought the lows. Of course, that's a big if, but believe it or not, and I'm kicking myself for this, I actually bought shares on the dip here in a pretty big way in 2022, but I ended up selling a lot of my position once we started getting back to the highs. So I definitely left some money on the table, but fortunately I was able to get it in the dip that we saw back in April. I was able to add some shares. I now have 60 shares in Meta, and this company, in my opinion, at the very least is still a hold, if not a buy on the dip for me personally. Meta beats Q2 expectations, stock jumps on better than anticipated Q3 outlook. Meta's earnings beat expectations, and here's how analysts are reacting. Long story short, they're reacting very positively. And another quick note on this is a lot of drama has surrounded the idea that Mark Zuckerberg and his team are all about accumulating talent and actually buying talent from other major AI related companies, talking about shoveling out hundreds of millions of dollars to recruit some of the best talent in the AI space. And some people have actually said that is a risky play, but I think it's actually quite a smart play. People are already seeing, and if not, no one better than Meta is seeing really great return on investment when it comes to powering up those AI algorithms behind Instagram, Facebook, WhatsApp, etc. And so to me, I think this is a great move. And especially when you have such giant amounts of cash, reinvesting it into what is hot, what is strong right now, which is AI, to me looks like a really strong business move. And I think Meta can continue to push higher. By the way, the price chart just updated on our stock analyzer. Look at that jump. Huge push higher. By the way, the stock analyzer, the main purpose of it is to allow you to very simply look at a basket of very important financial data, and you can select from a huge list of stocks that we have in the stock box here. You can see we've got over 120, 130 at this time, with plans to add even more stocks to the list. If you wanted to pull up like Airbnb, or if you wanted to pull up any company, you can essentially pull up a list of financial data, and you can see the scoring that we're doing over here to help spot stocks that may look a little bit better or worse than others. I've been using it every single day in my stock trading and investing, and I find it to be a very useful tool. If you want to check out the stock box, all the information to explore it or to get a trial for 30 days of the tool can be found in the link in the description down below, or we'll also pin it in the comment section as well. Check it out. Next up, let's talk about the big one, the big boy in the room, Microsoft, aka Mr. Softy. And Mr. Softy reported a massive beat in terms of earnings and revenues. Check this out. We're looking at earnings that came in much higher than expected, reported $3.65 per share compared to estimated $3.375. That's an 8% beat there. And on revenues, right? Revenues beat by $2.51 billion, a 3.4% beat there. And I mentioned this earlier, but usually Microsoft is not a huge mover on earnings. The last time we did get a big jump in the stock, you can see we jumped by 7 to 10% last time around. This time we also jumped by a little bit less than that, 7-8%. But the point that I want to get at with this is that this is a stock that's already been going up like crazy here. From the April bounce back, guys, we're talking about a 50 to 60% run in the stock. Very impressive. And again, earnings to match that excitement. So this is where, you can make the argument like, oh, something is too high. But if the earnings come in and they reflect that the stock is doing really, really well, the company underneath the stock is doing really well, then the stock can continue to rip. So to me, when I look at Microsoft, this stock is not one that I own. I wish I owned some shares today, but it's a incredible business. It's super, super profitable, and one of the big ones for a reason. Microsoft posts the Q4 beat on top and bottom line on cloud and AI strength, and you can see the stock jumping in our portal here in the stock analyzer as well, with a trailing 12-month PE. Now, again, this will be updated shortly, but it was trading at what has historically not been an incredibly expensive valuation for the stock. Yes, it's still priced expensive, but for good reason. Sometimes stocks are expensive because they are the best of the best, and Microsoft is a cash machine. And so even though we're getting a huge jump in the stock, I think it's actually kind of fairly valued. I don't think it's a cheap stock. I definitely don't think it's way too over expensive, but I also don't think it's, too far in either direction. So I kind of think it's somewhat fair value. So for me, when it comes to Microsoft, would Microsoft be a buy, hold, or sell? Well, it would be falling in the category of hold, with the idea that if we do see some downside move, if we get a downward move on this, there may be an opportunity to scoop up some shares and actually add it to my portfolio. Next up, let's talk about the wild card, which was Robinhood. Robinhood yesterday. So Robinhood, after hours, launched higher up to $111 per share, only to fall back and actually move lower here this morning. We'll see where it ends up today, but it is very, very volatile. Let's talk a little bit about what happened with Robinhood. Robinhood beat their earnings by a massive 37%. They were expected to put up 30.7 cents per share. We instead got 42 cents per share. That is pretty incredible. And they almost did $1 billion in revenue, which this is not nearly as big of a company, right, as Microsoft or Meta. But to put in really good earnings numbers like this shows that, there's a lot of hype for this stock. But how much hype is there? Well, the long story short, a ton of hype. Because if there was not so much hype, this stock would be up, in my opinion, 10-15% today. But because there's so much hype, there's so much excitement, and everybody is so thrilled to see this stock, and they think it's going to double and triple, the expectations, similar to like a Palantir, the expectations are just phenomenally high for this company. And so when you have everybody very excited about a stock and anticipating the best, it takes quite a bit to really surprise investors. And so, yes, this was a huge surprise, and I think this is really good for the company in the longer term, and growth looks really, really solid for Robinhood. There's also the argument that, again, there's a little bit of profit taking and expectations are just so high. There's probably a lot of call volume. A lot of people bought calls and got smoked on those, even though the stock had great earnings, or the company had great earnings. If you'd bought the 110, 115, 120 calls, there was definitely a lot of that speculation that is built into what this stock is. It's very, very speculative stock at this point because the valuation's so high. But again, you had incredible earnings to sort of back the hype around this yesterday. So to me, that's why the stock is not down a ton, and why investors who have been in this move, like myself, gratefully, are holding on to their gains. We're not seeing a big drop here on the value of the shares either. So I think holding all these gains is a win for investors. Now, if you tried to buy calls or tried to make a big speculative bet on where you thought the earnings were going to go, then you might have not had such a good time. But if you're an investor that has been holding on to this stock or trading it, swing trading it, like I have, it's been a really good run. And for me, I've sold calls on this move, so there's a possibility. I sold the 95 strike calls out to mid-August, so there is a possibility that I do get called away from these shares if we don't get some rollover. If we do get some rollover, I'll possibly make a small profit or break even on this. I collected a little bit of profit on this. I'll show you the trade. So here's my situation on Robinhood. So I sold calls for August 15th. I sold the $95 strike price calls on Robinhood because I think the stock is a little bit extended. I truthfully think that this thing has room to really pull back, and what will look like a stock crash to people who are, buying it at the highs will look like a modest correction for the rest of us. If you bought this thing and you've been holding on to it and you actually like it for the long term, I think it's perfectly normal to say, hey, this has been a phenomenal move. Profit taking and a little bit of sideways or downward move is perfectly normal. So I sold the $95 strike price calls out to August 15th. If the stock comes down, I could potentially make some profit. If the stock goes sideways or just modestly lower, I could potentially break even on the calls that I sold and perhaps sell fresh calls. Now, if the stock goes up from here, what happens to me? Well, I still own 600 shares, but I've sold 6 contracts short on the call side. So I'm capped. So I can't make any more money if the stock goes up. So I'm not going to lose anything if stock goes up. I'm just not going to make any more. That's what a covered call position is. I would encourage you to check out covered calls or search them up if you need some clarification, but I'm losing on the calls because I shorted calls that are now in the money, right? So calls in the money, when you sell them, that's against you. When you're buying calls and it's in the money, that's great. So for the buyer of these calls, they're doing pretty well in this trade. However, again, there's only a little bit of time. There's 15 days left on these calls. And so if the stock price has any downside the next week or two, I could probably get out for a small profit and look to sell calls again. But it just goes to show, I've had a little bit of trouble on this call selling campaign that I've been on with Robinhood. Just goes to show when a stock is really hot, it can just keep going for way longer than you think it can. Yesterday, I did also sell calls on my Nvidia position. I own 500 shares of Nvidia. I sold the 205 Nvidia calls and I collected a premium of $1.38 per share. I'm currently down on this position, but if the stock price has any sideways or downside move in the next month or so, I could probably make a profit on this trade. Essentially, I have upside on the stock unless we break above the 205 strike price, in which case I have no additional profits that I can make from my shares and they could get called away from me. But if the stock price goes up or sideways or down, I can make money on the calls that I sold and collected premium on. Fortunately, I did not sell calls on my Meta position as I only have 60 shares and you need 100 in order to sell calls or cash secured puts. You're talking about lots of 100 since that's how option contracts work. One contract equals 100 shares. Just a quick update on some of my other positions that I've been updating inside of our VIP room. I sold ET cash secured puts and I collected a premium of 26 cents. At this point, the contracts that I sold are now only worth 6 cents. So I've collected a 20-cent profit times 20 contracts, which is 2,000 shares. So I've collected overall, I'm sitting in a profit, open P&L of about $410, or about 77% of max potential profit. The stock price has moved up, which again, I'm selling the cash secured puts at $17 per share. So I'm sitting in a nice profit here. Here's an update on American Express, another stock that I own. I sold the 320 calls against my shares. I have 100 shares of AXP. Actually, I have 120, but I sold one contract against my 100 shares. I'm currently sitting on a 36% of max profit P&L here, or 140 bucks. And my current biggest position in the account, Tesla. Tesla has gone sideways, which has made it a really good candidate for selling covered calls on. I'm currently sitting in just under $1,000 in profit on the August 15th calls that I sold against 200 of my total 400 shares. I sold these calls for $6.10. They're currently worth $1.12. Because I'm short or sold them, this is a profit for me. I am looking for an opportunity to realize this profit, and if we get a pop in the stock again, to sell calls once more. And if you're interested in trading stocks and options with me, then consider joining us inside of the Discord group. I'll leave it linked in the description down below, but every trade that I place, options, stocks, covered calls, cash secured puts, I report in detail to members of our group, and I am very, very active. I trade earnings reports. I trade, I have a short put position on UNH right now, but if you're interested in trading options with me, then I highly recommend you explore, or if you have any questions, I have a support team behind the scenes here at my company, A1 Trading. You can message us using the first link in the description down below for more context, more details. And if you let them know that you were watching the video today and you made it to the end, first of all, I appreciate you watching my video. Second of all, if you let them know that you were watching, we can get you 45% off the stock box or our VIP group. If either of those are interesting to you, just let us know. Send us a direct message down below, and I'd love to meet some of you guys and trade some stocks with you. Thanks for watching.